today's market movements. Marcus Bogdan from Blackmore Capital joins us now live. Marcus, great to have you on the program this morning. Look, there's some bullish people out there at the moment when it comes to the local market, the ASX200. We've heard some calls for the 8,000 mark even just over the next few months, and we have seen some record highs when it comes to those big quality names, CBA, Goodman, REA, Wesfarmers. So do you think this momentum can continue?
I think there's really strong foundations of why those companies have performed so strongly. They have executed brilliantly through COVID. Their earnings have been generally very resilient, and they're the number one players in each of their segments, and they're critical parts of the economy, whether it's banking and CBA, Goodman Group, which is benefiting from online distribution, and then obviously Woolworths and Wesfarmers have stepped up on their online execution. So I think the premiums that they're trading at are warranted, but I do now think that now that is really reflected in their share prices. And like so much of the market that we're seeing now, we're at fair value or slightly expensive where we are today. And, we're seeing that with the recovery there of the ASX200, probably 3 or 4% above its pre-pandemic levels.
So just interesting to get your perspective, Marcus, in regards to inflation, how you're viewing that, how that's influencing your portfolio choice. For instance, are you becoming more defensive?
Yeah, we have tilted more defensively in terms of how we're seeing inflation. It's certainly been stronger than people have anticipated. There are real bottlenecks in supply chains. We have focused on companies that have pricing power, that have been able to pass through those costs. I do think that they are ultimately transitory. I think there are significant base effects that we're seeing in the rises, and if you see where the greatest push has been in terms of prices, it has been in those sort of reopening trades. Now, they may stay elevated for some time, but I think ultimately they will start to moderate as the economy starts to normalise.
And Marcus, we've spoken about quality laggards now for a few weeks. That's been a key trade for you. How's that trade going?
Well, you have seen things like CSL recover. Since May, they're up around 11%, well ahead of where the index is. And again, that is one that has recovered. It's now, it's gone from sort of $270 to over $300. That is now, I think, reflecting the fact that they are starting to see improvements in their underlying plasma collection businesses. And again, that now is fair value. It was at a discount. It's now trading at fair value. The long-term assumptions around it are still incredibly positive, but it is one that has certainly caught up. Others that have recovered, you're starting to see a recovery in Brambles. Some of their key inputs, such as lumber, have come back. And the third one that we've discussed previously has been in Medibank Private, where those underlying trends have been stronger than anticipated, and that's also been reflected in the share price today. So all of these companies are core portfolio stocks, but I do think that you've now seen, the biggest upgrades in terms of share prices.
And Marcus, in terms of the defensives that you're liking at the moment, particularly perhaps those that are offering an attractive dividend, which companies are you looking at?
Well, the two which have still lagged the market, which I think the underlying performance of those companies is still very sound, is one is Amcor. They've recently upgraded. They're expecting 14 to 15% earnings per share growth. They are capable of passing through their key import costs, particularly in resin and aluminium, and that provides a 4% dividend yield, coupled with very attractive earnings per share growth. And the second one is Spark New Zealand, which is the major telecommunications company, which is listed on the ASX200. They have confirmed their guidance for FY21 in terms of EBITDA, but they've increased to the upper bound in terms of their dividend to 25 cents, which places Spark on a dividend yield of 5.4%. And they have executed very well over a number of years, and so we think that's an attractive stock that's underperformed the broad market across the last year.
Marcus, are you fully invested at the moment, or do you have some cash on the sidelines looking for a pullback potentially, or just looking for value elsewhere?
Yeah, we are primarily fully invested. We've got anywhere between 3 to 6% across our portfolios in cash. So that gives us a little bit of appetite to participate in some sort of downturn, but we have moderated some of the really strong performers. We have become more defensive and trying to buy greater value. But I think participating in this market is important, and having that, but also having some ability there on the cash.
Marcus, always good to get your opinion. Thanks for joining us from Blackmore Capital.
Thanks, Andrew. Thanks, Cara. Cheers.